The Bank of Canada today left its overnight rate unchanged at 1.75%, a decision that was largely anticipated by financial markets. Global trade tensions remain an area of concern for the bank. The tentative agreement between China and the U.S. is a step in the right direction in terms of lifting the cloud of uncertainty over the world economy, but a permanent and full agreement would go a long way in perhaps preventing some economies to go into a recession in 2020. Domestically, the Bank of Canada lowered their growth forecast for 2020 slightly, based on continued weakness in business investment and exports. Going forward, it's going to be critical to monitor consumer spending. The outlook remains positive. Unemployment is low, wages are growing. Sometimes in some parts of the country, they're growing really fast. And if consumer spending were to slow at any point in time between now and the rest of the year, that perhaps would lead the bank to consider changing its stance on interest rates and perhaps even match some of the interest rate cuts that other central banks have implemented, mostly the U.S. Federal Reserve. I do think that between now and the rest of the year, we're likely to see interest rates not move. But going into 2020, we'll have to monitor conditions and how conditions in the financial markets evolve to understand what the stance of the Bank of Canada will be on interest rates. For more details, check back with us on the Ag Economics section of the website at fcc.ca.